All opinions expressed on OptionsBrew are solely opinions of the show's host or guests and do not reflect the opinion of Tradier Inc. or its affiliates. You should not treat any opinion expressed on the show as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of opinion. Options are not suitable for all investors, as the special risks inherent to options trading may expose investors to potentially rapid and substantial losses. Please consider your financial condition and investment objectives before investing. To OptionsBrew radio podcast. This is a new series for us, and what we're trying to do is get some great commentary from some of our great partners at Tradier. Today we have with us Mark Phillips from Harvested Financial. He's just done a great job with his new product, Harvested. I'm sure he's going to tell you a little bit about it. He's got some great commentary too we're going to go over. So let's get Mark, you're here. Come on, say hi, do your thing. Tell us a little bit about yourself first and Harvested, and we'll get into your specific commentary for this week.
Yeah, hi Lex. Thanks so much for having us on here. So a little bit about myself. Spent the last 15 years in the options market making business, and from the pits to the electronic screens, working in business development and generally across the whole trading side of the business, learning about these amazing products that are options. And so after all that experience, I decided I wanted to find a way that we could get these out to retail investors and that we could bring the power of option strategies to individual accounts. So over the course of this past year, we've been working on launching an advisory firm. And what Harvested focuses on is automated options strategies. Mm-hmm. So what we look for is opportunities in individual stocks that people are looking to capture specific opportunities. Maybe that's around an event, maybe that's around earnings, but then also general portfolio management strategies to harvest volatility premium, to take advantage of market neutral strategies. So overall, our goal is to bring derivatives to everyone and deliver option strategies as a little bit of different in people's portfolios.
Oh, that's fantastic. That's great. So that's an interesting, I'd say, twist on the advisory stack, especially what we see at Tradier. Most people, they think of advisors as people are going to put them in stocks, and they're a little bit longer term, and they're going to own these stocks and manage their portfolio that way. However, using a derivative is a little different. Derivatives are great for Tradier. We enjoy that. And so that's a little spin. And people have this little stigma about options being a little difficult to understand, but sounds like you guys demystify that to a large degree. Does that sound safe?
Yeah, no, that's absolutely our goal. That, while many people find the complexity of options fascinating, it's not for everyone. There are a million different strikes out there. Understanding all the Greeks and the deltas and managing expiration, that's a complicated problem. And that's something that we actually think computers are really good at solving. Good. So we leverage the power of technology and Tradier's backend to manage all those strategies and to automatically roll clients in and out of strategies and different options positions so that they get those kinds of returns that they're looking for without the kind of maintenance and headache to manage them.
Right. No, that's terrific. Okay, let's go to your idea for this week. So the idea here is to have Mark on regularly. You're going to come up with the hard news for Mark is that he's got to come up with a commentary. I just get to ask him questions. I got the easy job, so you got the tough job. But this week, I think you are talking about Nikola. Did I say that right? Did I pronounce that right?
To be honest, I'm not totally sure. As options guys, we like to joke that we only used to know stocks by their tickers. So right. I just see the 4 characters running across the screen, and I'm not even totally sure how to pronounce it. Okay, Nikola, something like that, though. We know they make electric trucks.
All right. The safe news is that the ticker is NKLA. Nikola, whatever. But it's been in the news a little bit. We've had a little bit of fireworks out there with perhaps the founder, CEO. What do you got for us with Nikola this week, Mark?
Well, fireworks are what we love in the options business, right? Like when there's news, that's what's going to bring the activity, bring the action, and present a lot of these really interesting opportunities to take advantage of. So we have fireworks on a personal level, right? We have some sexual assault allegations, some pretty nasty stuff with the founder personally. Mm-hmm. But further than that, there's been a lot of questions about kind of the long-term viability of this business. Are they really going to be able to deliver all the vehicles they say they were? And, General Motors recently swept in and said they were going to help out. That deal itself even seems a little bit tenuous right now. So a lot of uncertainty, a lot of allegations swirling. Management's coming out on the other side and saying that, nope, we're going to be able to hit these figures. So we saw stock really jump this afternoon. Mm-hmm. And this kind of choppy trading, that's perfect for options.
Okay, good. And I'm looking up Nikola now. So do you have a price for me? I see it at $24, up about 15% today.
Yep,
Sound
exactly.
about
Just
right?
over 24, I believe it closed.
Okay.
So sitting around 24 right here, we're seeing some pretty big moves. Like you said, up over 16% today.
Mhm.
The volatility looking out just 2 weeks is actually pricing on average that the stock is gonna move 12.5% a day.
Okay, so let me stop you there because I know that's a little bit of a concept. You and I understand that concept from our trading days. Um, Implied volatility of the options is predicting a price move of 12.5%. Can you explain that a little deeper so the folks can understand that a little bit? How does that play out? You don't have to get too specific, but how does that play out? What do you mean by that?
Sure. So this is actually a great rule of thumb when you're looking at implied volatility numbers. Implied volatility is kind of the main price driver of an options
Mhm.
valuation. So if we're looking at these options in October, the October serial expiration on October 16th, the vol is around 200 right there. So 200 volatility level can be translated into an average daily move. If
Okay.
you take that 200 number and divide it by the square root of 252, so we picked 252 because there are 252 trading days in a year, and volatility and time are inversely related in the options pricing equation. That's where we really go off the deep end. But this short little trick where if you take the volatility number and divide it by the square root of 252, which is
Mhm.
about 16, you come up with that 12.5% number.
Got it. So that's a massive move, and that's what the square root function does, I believe, is it takes the annualized volatility and puts into a 1 day move, right?
Exactly.
So that's gigantic, a 12.5% move based on looking at the options, the at the money option gives you that value. That's a monster move on a daily basis. Agreed?
Absolutely agreed. And for a stock to be able to keep that up is, that's a lot of activity. Those are 10 stressful trading days if stocks moving 12.5% a
That's
day.
right. That's right. Okay, how do we take advantage of this high volatility? If you're, I mean, again, you tell me, are we a directional bias? Are we thinking it's going to sit still, which we've already proven it's not? What do we do here? What's a good idea with this stuff, this high volatility? Any thoughts?
Absolutely. I think that high volatility in and of itself presents a great opportunity.
Okay.
And looking at where the stock has been trading relative to the last couple months, we've seen a pretty significant beatdown. There is some optimism out there,
Yep.
and it feels like the rest of this, sort of bear route has had its day.
Okay.
So we have a little bit of optimism. So I'm looking for a strategy that's going to be Nikola can stay relatively constant or maybe move up. So I'm going to look for something that's going to benefit with a moderate to bullish perspective.
Okay.
And I'm going to give myself a little bit of cushion there because this thing has been chopping around a lot.
Got it.
I don't necessarily want to look for something right near the money. I want to look a little bit farther away of the money because I can expect that there's going to be some choppiness to the price action.
Okay, just so we're clear, then you're a little bullish on this from this beatdown. You think there could be a little bit of a bounce, best way to say it.
Yeah, I think there could be a bounce. And
Okay.
actually, I think what options make really interesting is that you bet on the probability of a bounce.
Sure.
And that, like, what you're doing here is betting that everyone else seems to think this is really beleaguered. Can I really, is there a better than X chance that something good is going to happen?
Right.
Is that going to fall in my favor? And can I find odds that let me capture that opportunity?
Got it. Got it. Okay, great. Let me do this. How about if I pull in a chart of this thing? I'm just going to do a 3-monther just to get a feel. Is that okay?
Yeah, that's great. I think that'll provide a lot of perspective on what
Yeah,
we're
let
looking
me
at
let me
here.
do that. I'm going to share my screen real quick and show that. So here we go. Okay, and of course, can you see my screen or no?
I can, yeah.
Am I showing a chart or not?
Yep.
Oh, okay, good. Um, Perfect. So this is Nikola over the last 3 months. Okay, and what we're talking about, here's the latest down here, right? Here's where it was at its kind of 3-month peak, let's call it, right up at 58 or so, and we're down at 24. So this thing's been these are big numbers, right? These are some big numbers here. It's
Absolutely. We've seen just a total beatdown and, repeated tests of this, right? They thought better news was coming out and, investors kept hammering the name. So we've seen a
right.
lot of action. This price has definitely had some time in the marketplace to follow through.
Yeah, the other thing I'd note on this chart, and I'll go back to, I'll stop sharing it, is there's some big candles here, man. This is your 12% stuff that's happening. Look at these candle sizes. Those are
That's great.
huge, right? So
And some of the
that's where,
gaps overnight, I'd point out there too, right? Like that's
yep.
one of the potential uncertainties when you're dealing with strategies is what is this going to open at tomorrow?
Yeah, crazy. That we used to call that in our day jump risk. I don't know if you refer to it as such, but we called it that.
We were gap risk people, but
Yep,
I
same.
suspect the exact same thing.
We called it jump, you called it gap. Terrific. Okay. So you're gonna do an options play in this. I'm assuming, I'm gonna guess, right? You tell me. You're high premium, got to take advantage of high premium. So you're probably gonna do some kind of credit spread. I guess if you wanted to go higher, maybe a put credit spread to take advantage of that. Any thoughts there?
Absolutely. You're barking up the right tree. That's what I was thinking, that I
Okay.
think a credit put spread makes a lot of sense here. And I think to dissect that a little bit, the credit aspect of it is what lets you capture that volatility premium. We know this volatility premium is incredibly high and that people have really bid up sort of the cost of insurance.
Mm-hmm.
If you want to write that insurance and capture that premium and say, you know what, 12.5% is crazy. I don't really believe that it can kind of keep up this mania.
Mm-hmm.
You want to capture that with a credit spread.
Okay.
And by selling a put spread, that gives you a bullish directional bias.
Okay.
So you're going to be short volatility, collecting that volatility premium while leaning bullish. And what I said a little bit earlier about taking it a little bit further out of the money, you can actually go as far as 20% down. So we're closed around 24 right now.
Mm-hmm.
If you look at the 20 strike, so I was looking at the 2019 strike here.
Okay.
So if I was going to sell that put spread, I would sell the 20 put and I'd buy the 19. One of the really big things for us is defined risk spreads. I don't want to tell anyone to go out and sell naked puts. I think that's not necessarily the most responsible way to manage your money. But a nice defined risk spread, if you sell that 19-20 put spread, you're going to collect around 30, 35 cents, depending on where you get executed.
Okay, and that's a $1 put spread, I think is what you said, right?
That's a $1 put spread.
Okay, what month was that, Mark? I'm sorry.
I'm looking at October 16th.
Okay, I'm looking it up right now as we speak. Okay, it was the 20, sorry, what was the strikes again? I apologize.
The 19-20 put spread.
Got it. I'm looking at it now. Okay. Yeah, so I got midpoint 35 cents right now.
Okay.
Great.
Yeah, so if you can collect around 35 cents, maybe a little bit more, like maybe a little bit less, like you have a nice risk reward set up there for you.
Yeah.
So for every options contract, you're going to collect $35.
Right. Okay.
Your maximum.
And the risk reward is pretty nice there. It sounds like, right? We know you can. Yeah, that 2019 you can lose $1, right?
Right.
That's the most less what your credit is. So
exactly.
Yep.
So you're risking $700, $650 on this spread to make $300.
Right, and the probability of the loss is not so great either from where this thing sits. And this is what is this, 2-week trade, right? 16th is in a couple weeks from now, right?
Exactly. It'll be 2 weeks from the Friday.
Okay, good. So that's a put credit spread, high volatility sort of play. Certainly, the directional bias is upward, meaning to the bullish direction with this type of trade. The other good news about this trade is that if this stock happens to drift lower, there's still a chance that we could take advantage of our premium. What's bad for this spread is a harsh downward move through that 19 strike and beyond, right? Is that safe to say?
Exactly. That this will do well. You have a nice buffer of that 20% drift that you can, lean on going into October expiration.
Awesome. Great. Nikola. Okay. That's all great stuff, Mark. Terrific stuff. So thanks for coming on. This is going to be our new series. Mark's going to be on a lot. He's going to have some great ideas each week. This is going to be at a podcast. We're going to put it on OptionsBrew YouTube, right? And Mark is going to be a guest of ours on OptionsBrew in a couple of weeks, right?
Yeah, 2 weeks from Wednesday.
Yeah. So, and you know what I'm going to ask you, how did this Nikola spread do in 2 weeks? Is it right around expiration?
That'll be perfect. We'll be 2 days to expiration. We'll see how we turned out.
All right, man. Good deal. Well, thanks for coming on, Mark. I appreciate it.